Is the market going to crash? Man, that is the $1,000,000 question. And it's one that keeps me up a lot thinking when that event might occur in both the stock or the real estate market. So tonight, I wanted to talk about 3 things that I think about most concerning that could be considered the catalyst to why the markets could collapse. So let's talk about them. But before I begin, I don't want to come off as doom and gloomy. I'm very optimistic. I'm very pro-American, and I always look at the best in a worst case scenario. So far, we've just come off of a horrendous pandemic, and overall, our economy's kind of gotten by for the most part. And the Fed's done its mission as best it could to steer with interest rates from crashing the economy during the pandemic to now trying to steer us out of inflation. I think the 3 biggest things that the Fed has been watching is obviously inflation is critical. Also, the markets are keeping a watchful eye on recession fears, given that the Fed is having to raise interest rates. And tertiary to those 2 is earnings revisions. And we'll kind of go into the 3 factors of why earnings revisions and multiples will play a reason why the market could slide, maybe not to a collapse, but there could be a significant drawdown in the stock market. So let's go over my first thought of why the markets could potentially have a collapse or go down pretty significantly. So one of the first things that concerns me, being that I'm a real estate professional and I've been in the business for over 12 years, is the whole commercial real estate bubble. You know, what I have seen personally is, to include our own firm, we have shut down. We haven't necessarily shut down, but we have 3 offices that the owners are actively trying to sublease. The particular office that I work out of with some of my colleagues probably rents for, I would assume, $20,000 a month, and it's in Scottsdale, Arizona. And no one comes to the office. It's probably like 2 or 3 of us are even in that office. So likewise, the owners are probably trying to, if you know you're going into a recession, you know, like any company, you're probably going to cut staff. You're going to cut any type of overhead you can to protect the balance sheet. And I'll be honest, they've been trying to sublease their space and even at a loss, significant loss, and no one is wanting to lease it. It's crazy. And they're probably paying $20,000. We have 3 of those offices that they're trying to do that with currently. So I can imagine if you're in major metros like San Francisco, you name it, and people are not coming back to the office, and people want to ditch those leases, or as soon as that lease is expired, I can't imagine if you're a REIT or an investment fund or an investor that owns these types of retail or office type commercial property, what you're going to be doing. Because if you have a major drawdown in your net operating income, and given where your asset acquisition basis is, those could be major drawdowns or losses. And if they're so significant, they're just going to basically get rid of the paper, and then the bank's going to basically have to foreclose. And the banks don't want to be in the real estate business, so what are they going to do with it? Because I feel like the bank already has a significant amount of unrealized losses from the duration risk that they assumed when buying up those treasury notes at very low yields, and now rates are going higher and higher. So that is my first really big concern with markets, is this commercial real estate market. And I would love to hear what y'all's thoughts are on this as well, given the commercial space. And if you're in the industry and commercial, please jump in the comments and let me know your thoughts. Number 2 is this new macro international news with BRICS. If you haven't heard of BRICS, man, you need to get on with the show real quick, because it looks like Russia, India, South Africa, China, and other countries, I'm hearing now in South America, to include even in Mexico, are all wanting to join trading energy with a gold-backed currency. So, as you may know, America has a huge advantage, being that the barrels of oil are traded on the US dollar, why we're basically the world reserve currency. But could you imagine if we lost that interdependency of the dollar or the petrodollar, and all of a sudden gold and other currencies were able to issue and purchase energy, that would change our way of life instantly. And given the trends in international affairs, again, I don't do this on a regular basis. I'm learning more and more each day. If you know more, please jump in the comments and share what you know. But this right here, this is definitely concerning to me. I don't know what would happen. I don't think that we would lose the world reserve currency. But again, I just can't imagine this is helpful in international affairs between our countries and our partners. So I'm just going to continue to keep a watchful eye on this, but this is definitely my number 2 factor that's giving me heavy reserves. So at the end of today's trading, this is April the 3rd, the S&P closed at over 4,100 points. We're pretty much coming to all-time highs again here. And what's mind-blowing to me is the multiples that stocks are trading on. When we just had a bank run or bank runs in regionals, like not even a week and a half or 2 weeks ago, it's kind of like we know that there's severe duration risk with these banks and solvency issues. It seems like the overnight repo market is the only thing that's keeping life support in a lot of these banks. And yet, given where inflation is, here, look at what Mr. Larry Summers said. So Larry Summers was on Bloomberg, and his comments on inflation and Fed rate hikes. So this is the most prominent comments that Mr. Summers had commented on this report, and this is coming from the inflation report from the CPI and Producers Price Index. He makes the comment, "I don't think one should make too much of that. I think we're still a substantially unstable inflation country unless the economy turns down fairly hard in response to the credit issues raised by the banking system. And we don't know yet whether that's going to happen." So given that the markets are just taking these inflation reports and job reports that are slowly, if not modestly, coming down, not to the degree of the velocity where the Fed had wanted inflation to be around 2%, or in between 2 or 3%, we're still at a easy 6 to 7 cap right now, or 7 handle on inflation. And I just feel like with the multiples trading, I mean, some of them are up in, like I believe Starbucks is trading at a 36 times multiple. And I can go on and on about other S&P companies, but my point being with the multiples overall, and looking at growth stocks, don't even get me started with NVIDIA, the semiconductors, some of them trading at 90% in the last quarter. This is insane to me right now. And my thing is this is all predicated on the Fed pausing or maybe even potentially rate cutting in this environment that we're in, with inflation still fairly rampant, because we still see used car prices going up. Rents are not going down. If anything, they're starting to come back up. The groceries are not going down. Guys, the Fed's going to continue to taper. And if that's the case, you can't have multiples and you can't go to all-time highs on the market. Dude, this is the third thing that's keeping me up. So, one more point to that. The Fed has never made a rate cut. Hear me out on this. The Fed has never made a rate cut when the VIX, the volatility index, meaning the fear gauge, has been trading at 19 or 18 consistently, which means everything's easy peasy, nothing to worry about. Don't worry about the bank runs. Don't worry about widespread inflation. 18 is very calm. Why the hell would the Fed make any rate cuts with a VIX at 18? None of this makes sense to me, guys. These 3 things are keeping me up, and I'm going to continue to hedge my investments and sell calls into this strength right now. I just don't see how we're going to maintain these multiples in the market. Please jump in the comments. Tell me what you guys think about the markets. Are we on the verge of collapse? Are we going to see a significant downturn? Love to know what you guys think. Please jump in. Let me know. Love to hear from you.